I'm Sandy Liang. I'm the lead portfolio manager for the Purpose Credit Opportunities Fund. I've been in the investment business for roughly 33 years, and I started my career in equities research at Nesbitt Thompson. I also worked in New York for roughly 12 years at Scotia, Bear Stearns, and a hedge fund. I was a partner, and I was there for 8 years, from 2000 until 2008.
An interesting time frame.
Was a very interesting time frame. I had a front row seat for the credit crisis, and it wasn't my fault, even though I was at Bear Stearns. But in this business, when you go through cycles, you learn a lot about dislocation, about investor behavior, about opportunity, but most importantly, about risk. Because in the middle of the business cycle, when everything is going well, people don't really think about risk enough, where in the middle of a market dislocation, that's when people realize that maybe they were taking too much risk. What is the Purpose Credit Opportunities Fund? The Purpose Credit Opportunities Fund is a credit fund whose objective is to achieve equity-like rates of return with much lower risk. The fund is an absolute return credit fund that was incepted in October 2013, and we primarily invest in fixed income and credit, which would include high yield bonds, investment grade corporate debt. Sometimes we do bank loans, sometimes we do convertible debt. But the objective of the fund is to invest from the bottom up and find asymmetric reward per unit of risk. The Credit Opportunities Fund uses a research-driven approach, bottom-up approach to investing, where the team specializes by industry and strives to understand every business and meet every management team that we can in order to understand the risk and reward of our underlying investments. We run the fund as if it's our own money, because it really is our own money. Did I mention the awards?
Yeah, I think you got them up, but maybe just mention the names of the awards again. We're going to list them actually on the screen too.
Oh, okay. So I can just say...
Just vaguely.
Yeah, exactly.
Yeah.
Yeah, we're going to list them on the screen, right? Mm-hmm. And we're going to scroll them.
Mm-hmm.
Oh, yeah, absolutely.
Yeah.
Like the Star Wars thing.
Yeah.
I know. Purpose Credit Team accolades.
Yeah, just read them off. Just read them right off your phone.
Do we have that much time?
We will take an hour. Yeah. Right. I think we can do the next question.
Yeah.
What's the next question? In its 10-year history, the fund has been through a number of business cycles, and 2015 and 2020 were probably most notable in the history of the fund, where the team entered the period with higher than normal net cash, and that provided us the opportunity to put money to work in periods where other investors that may have had leverage had to be selling, whereas we had the luxury of having cash, and we were able to increase our weightings in some of our favorite investments when they had traded down. So how has the fund performed in downturns? The best net return year in the history of the fund was 2020, which is counterintuitive, because in the first quarter of 2020, there was a lot of volatility, but we took advantage of that volatility. And in the spring of 2020, we had an all-hands-on-deck period in a number of industries that we favor, and started putting money to work. Well, in the current period, post-pandemic, I feel that we're in a different time period where there was a 40-year bull market in bonds that ended really in the middle of the pandemic, where interest rates were lower than fair value or lower than normal, because all the central banks in the world were generally printing a lot of money to buy bonds. And that drove interest rates down for 40 years, and that also included a long deflationary period with prices coming down at a lower rate. So we have a pretty strong view that that tailwind that was in place for long-only fixed income investors, that was a period that isn't going to be in place from here. We expect significant budget deficits in the United States of a couple $1 trillion a year. That's not actually our estimate. That's straight from the Congressional Budget Office, where if there's budget deficits in the US of $2 trillion a year from here going forward, that means additional supply of government bonds into the foreseeable future. What that means is that whereas it was very easy to run long-only fixed income money for 40 years, it's not as easy right now where you can't rely on rates coming down for a whole generation. For example, if you're in your 50s, then you might have 50% fixed income. But for that 50% fixed income, a fund like the Credit Opportunities Fund can play a very significant role because it creates return or generates return with a lot less risk in equities, which is really what you want in that half of your portfolio. The reason we don't use leverage is we believe that leverage only amplifies risk, where we invest in companies that have higher than average leverage, so there is leverage at the investment level. But the net result is, if you look at the volatility of a fund over time, it's had much less volatility than the equity market, and we strive to create equity-like returns over the life cycle or over a business cycle. That seemed like very convoluted, to be honest.
No, I think that's really good.
If I understood it, it wasn't
Yeah,
convoluted.
exactly.
Okay.
I mean, we can just put that there.
Mm-hmm.
But,
That's true.
well, we need an outro.
Thanks for your questions, and thank you for the partnership. That's what's really important to us, is partnerships with our financial advisor partners and our unit holders as well, because it truly is a partnership.
Reach out to.
Oh, if you're looking for more information on the fund or on the team or on credit investing, please reach out to our sales team.
Or visit our website.
Or visit our website.
Okay.
Okay.
Crops?
You know, I never call it that.
Controversial
That's a name that people call it, but you know, I always refer to, I'm like a parent, like I always say the Credit Opportunities Fund.
Like it's in trouble.
Yeah, I don't use
Never
a
in
nickname.
trouble.
Yeah.
Please.